Summer has come and passed. The innocent can never last. Wake me up when September ends.
Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is September 9th, 2022. S&P currently sitting at 4083. My name is Ian McMillan, and today I am once again joined by our two analysts, Kevin and Dan. Where would you guys like to start? Anything super important right off the bat that jumps to your mind that listeners have and clients have just got to know about over the last week?
Boy,
I would agree. There hasn't been a lot.
I don't know. Silence says it all.
Yeah. I mean, right? We've seen a bounce. I would say that as far as the major indices go, they're all kind of holding these, what I would call their original base breakouts back from July, mid-July, maybe a couple of, sectors and sub-industries later July. But if you were to pull up the S&P getting above 3,900 there, we've come back to retest it. NASDAQ getting above 12,000, that was retested this week. Russell coming back to like that 1,800, 1,780 area, retested. And then they've all seen, we're on day 3 right now of outside of any type of collapse this afternoon. I mean, it's going to be pretty solid 3-day rally here. But again, this doesn't fix anything. We're basically back to where we were 2 Fridays ago, the 26th.
Mm-hmm. Yeah.
And that was the big, that was a big red candle. I think that was the Jackson Hole day. It wasn't on my calendar then, so I can't really remember, but I believe that was the speech at Jackson Hole, big sell-off. We continue to sell off, and now a 3-day bounce right back to that place. So a lot of places, but a lot of going nowhere. Anything that has stood up in the meantime that has held up better, that stands out to you?
I think at least most recently, I think this was maybe a day or two ago, we were kind of looking at some names that we were kind of watching previously, like back when we first originally broke out from that level. Boy, how many weeks would that be? About a month ago, a little more. Kind of like when we first started talking about seeing a little bit more breadth expansion and like some of those individual stocks that were performing well.
Because we had gotten involved in a lot of individual names more so than these, maybe more sector exposure or index exposure.
Right. Yeah, it was almost exclusively individual
stocks. It was almost all individual names because I was like, well, I got a lot more confidence in, these areas, or we had a lot more confidence in these individual names breaking higher than, a major index, which probably points to some type of, that's probably I don't know if I'd call it was a bread thrust, but before you saw those numbers, you still saw the, charts on scans.
Yeah, it was like the prelude to it. And if you look at those names again,
I think they held up pretty well.
Yeah, for the most part. There's a couple
held up real there. Well.
Right. I would say a majority of them.
STNG, DGII, Ballard Power got hit, but then you had
like Ryan, RYN, that's an insurance name, Pub.
Decker. Mm-hmm. A lot of those train.
GPC, got to have your auto parts.
in phase, which we were out and then back in, and we'll see. Solar's been a strong area. We'll see if that holds up.
Yeah, because that's the thing. Once we broke back below like ballpark at like 4180-ish, you want to really started kind of dialing back on those individual names again.
Well, yeah, and I would even say it was really into that 200 day. I think that there's a lot, it's that debate on like the 200, does the 200, are moving averages resistance, or are they support and resistance, or are they just an invisible line?
Well, I'll tell you what, look at that August 16th candle and say it's not resistance.
Yeah, and then there's times where it doesn't work out that perfectly. We decided to use that day and the very next day to essentially pile out of a majority of what we had spent the last month piling into. In this instance, it did end up working out very well in regards to a line in the sand. And that was okay, because let's say we get above the 200 and we're above 4,300, and, that's okay. It is, you can get right back just as long, 2 days later.
Mm-hmm. Well, especially now that we're looking back at those names again, I mean, you can kind of see they didn't sell off as hard as a lot of other stocks out there and things like that. And I mean, if they were leading then, it looks like they're holding up good now. Why wouldn't they necessarily have the opportunity to lead when we turn back around higher?
Well, and that is what I think has made this such a difficult environment, and especially, social media and everyone's, there's plenty of evidence that says, broad indices are in a downtrend, and who wants to get involved in a bunch of stuff when the overall quote unquote market doesn't really look that healthy? But is there some kind of, we talk about solar, but it's not like this is all utilities and staples. It's not like it's Coca-Cola going out to 52-week high. There's some pretty solid speculative things out there.
Mm-hmm. Yeah, because really, even like some of the software names, like biotech names, kind of some things that you wouldn't necessarily think, like some of your risk on stuff, really isn't looking too bad.
Well, then, of course, speaking of risk on, a lot of people like to immediately go to, well, what is crypto doing? And it had been hanging out here below 20,000, really sitting on these highs back from late 2017, late 28 or early 2018, I believe. Or was that late 2018? When did crypto peak? The first, when I say peak, I know it's had some cycles, but was that like Christmas 2017?
Yeah, it was 2017, early 18.
Yeah. So we're back to those levels. And, today we've seen a pretty big bounce. I don't know if it changes the downtrend per se, but that level does continue to find demand come in here. We saw it in June, and we saw it again today. Well, today.
Yeah, now it looks like 22,000, kind of that more like next hurdle for Bitcoin at least, right?
Yeah.
To see if they can get over that hurdle.
And I'm sure Ethereum's having, Ethereum, I'd like to see it get over 1,800, 1,770, 1,800, but that doesn't mean that Bitcoin or, that they can't, if one doesn't get there, that the other one can't.
Sure. Well, then too, even on the currency note, just coming back to our home currency too. I think this week, from a weekly perspective, like the dollar is it started off really hot and has kind of since fallen back.
Yeah, and we've seen, this three-day correction in the dollar, 3-day uptrend or 3-day bounce in stocks. Will that continue? I think as long as if we're using DXY, I think as long as you're still above 108, where we bounced today, 108 and a half maybe, I think that your uptrend stays intact. But golly, they love to run in any weakness in the dollar. Boy, do they pile into equities.
Mhm.
It is really fascinating what small moves in the dollar, how giddy it gets people. I will say that giddiness has not been seen in fixed income. What is going on? I mean, are treasuries ever going to be again? Is my son going to is that even going to be an asset class when he gets to having a 401k and retirement planning? Sometimes I wonder.
Guess we'll find out sooner or later. But no, I mean, what new lows relative to at least earlier this summer on 20-year Treasury bond ETF TLT this week.
Yep, they're below their
close on a relative basis too. I want to say it's like right there versus
S&P. Yeah, which I mean, I guess that's going to be a feather in the cap. I mean, historically would be not that they can't go down. It is wild that they actually are still both going down, and
right.
Treasuries are still worse. But if you were to take this relationship on its own merit by itself, yeah, I guess point for the bulls for sure. If they want to own stocks more than they want to own treasuries, or this is going to be just the worst bear market for treasuries that anyone working in this industry has seen. Right? We kind of had a conversation on that earlier. Outside of being 70, if you're in your 70s and you're still working in the industry, you've probably gone through a true rising rate environment. But as far as like, let's say we do go through a 30-year cycle where rates go up, there are very few analysts, portfolio managers, whatever, sell side, buy side, doesn't matter, that have been through anything like that.
Yeah, both from just a market
What about
perspective.
junk bonds? Are junk bonds still?
Yeah,
Are they struggling as much as treasuries?
I mean, yes, from a broad perspective, I would say a long-term perspective, yeah. But
I guess they've gotten a little bounce here with equities, huh?
But recently, short-term has definitely seen a nice little bounce here when you're looking at like HYG or JNK, even relative to some of these more treasury-specific ETFs. So, I mean, who knows? Like you said, if we could be in a different regime where some of this risk on, risk off type of relationships, do they matter for a little bit? Do they matter for a long time? I think that's why we're all here playing the game. So,
way to look at the charts, right?
Yep.
Yeah, and does this end up being? We had talked about this. And I wasn't really aware of this till early in the year when we happened across some data because it was another kind of project we were working on. But, there are certainly environments like we saw in 2000 to 2002, 2003, where there can be quite a few stocks that do just fine and the indices stink. And you've got stocks that are up pretty significantly in some circumstances. I mean, there were, especially in like the healthcare sector during 2000, 2002, there were some really big winners. I'm talking up like multiple hundreds of percent. I'm not saying that happens here, right? And you had major indices in a horrible 3-year correction. And the average stock, quote unquote, the average stock did okay. And a lot of them did awesome. Again, not saying that happens here, but it has happened before. So seeing these environments where the 30,000 foot view, the indices tells you that the market stinks. And then when you're under the surface and you're looking at individual names and you come across them, like we do, like our team sits around every day and we run the same scan same scans for better or worse. And sometimes there's a lot and sometimes there's very few. And recently, you guys have found a lot of pretty attractive setups. Like if I had no context of what the overall market was doing with a lot of the things you guys post, I mean, in phase going out to, we got solar stocks at all-time highs. How, right? That kind of gets that, how bad can it be?
Sure.
Question rolling in your head.
Well, I think part of that too, so we kind of talked about this a little bit at the last lunch and learn, but this kind of makes that point that over time, like relationships and correlations, they do change and they kind of fluctuate back and forth. Like at the last lunch and learn, big emphasis on like inflation, precious metals. And then if you look at like some correlational charts with those, you can kind of see basically, I can't remember the exact date. I think it almost might have been right at the beginning of the year. Those relationships kind of flipped.
Yeah.
So, I mean, that's the thing with some of this stuff that we were saying too, just seeing what the major indices do kind of guides your attention, right? In a broad sense, if you're not looking at this stuff every day.
Yeah. Why is the dollar ripped and commodities have ripped? You made that, I think that was April you presented on that.
Oh, yeah, because that from a, what would you call it, academic perspective, it just really shouldn't happen, right?
Why are we having insane inflation and gold hasn't budged? In fact, I think it's gone down. I mean, right? Like, no, if you had told someone, hey, coming into 2021, 2022, CPI double digits, I can guarantee you there's a lot of textbook thinking out there that would have said, well, yeah, like I'm going to pile into gold. Maybe that still pans out, but it hasn't yet.
No. Nope. And that's one of the main things I remember from college stats class, Professor Johnson, correlation does not equal causation. I mean, that stuff's not a constant,
It's not. Yeah, it can be highly correlated over a long time, but those in-between periods will get you.
Not only that, they create opportunities that maybe you wouldn't be thinking were possible too, right? There's always opportunity somewhere, one side or the other.
There is. It's kind of why I wish this commodity trade would come back, but kind of wish our nickels and our tins and our aluminums would go on another run, but this doesn't seem to be.
Well, bring it, because actually you guys are talking about junk bonds. I don't know why I flipped to this, but one thing we haven't talked about in a while, convertible bonds. Like I don't use ICVT.
Yeah.
I mean, that's something that I mean, if that was on Jeopardy, I mean, you were going to pose a statement that that's approaching kind of interesting levels. I mean, I wouldn't think so. And this would naturally go there, but really they've been holding up pretty well. And I guess I would consider that more of like a risk on fixed income asset, right?
That's an absolute, it's a great, what Kevin's talking about is ICVT. It's a convertible bond ETF that we have owned on and off. Would you say it's kind of like the kind of convertible bond? More, I mean, it's more techie, right? Like the debt of the underlying companies is a little bit more high growth as well.
Right.
And it does. I mean, it kind of looks a little bit more like the S&P versus your, typical fixed income index. And I mean, going back to the same behavior, this base breakout came back and retested it over the last couple of weeks and is now seeing a 3-day bounce. But to a good point, I mean, if those types of bonds are going to act like that, maybe we are closer to the end than the beginning.
Well, that actually, I just keep stumbling across these, but if you look at ICVT versus HYG, so high yield bonds there, we were talking about before the 200-day moving average serving as resistance, September 1st, rejected off there, and today it's touching it again. So see where that goes. And that's just in that relative relationship, which is kind of cool. But
great eye there. All right, seasonality. Seasonality has obviously been a huge topic. I think everyone and their mother at this point is very aware of what the statistics around September seasonality are. And it is not great, right? We know it's the worst. I think it's the only month that's actually negative on average. I believe that that is the case. Someone please correct me if I'm wrong. Feel free to do so on Twitter. But when we look at seasonality, versus all, maybe we take some of the other smaller ways to quantify it, midterm years, who's president, second year, things like that. And I would say midterms, probably just like a broad midterm, probably be the easiest way to go. Does anything stand out that's different to you? I know I have some thoughts on kind of September seasonality, but didn't know if you guys had anything you wanted to throw in.
No, it's just kind of interesting. Like, I know just seeing some of the seasonality figures and trends, like for the back half of September, and just kind of knowing and understanding, like, we have some. This is more in the future space and the option space, but it's good for us equity market participants to kind of pay attention to, just because you're going to get a lot of bigger funds and bigger players in the market, shifting out of some of your futures contracts rolling out. So that's going to be taking place here in the next couple of weeks. A lot of options are expiring off the books here. So from a seasonal perspective, you have all that kind of coming into this end of September timeframe that we just need to be, we as market participants should be paying attention to.
Totally agree. I will say that one cycle composite that I know that we've paid attention to, it was originally put up by NDR, Ned Davis Research, and they don't update it all the time, at least publicly, but I would say that their 2022 cycle composites, so what they saw happening throughout the year coming into January, and this is so basically 1 year seasonal cycle, 4-year presidential cycle, and 10-year decennial cycle. It continues to play out, minus like a little, they had Q1 a little bit flatter than it ended up being. But in regards to target drawdowns and corrections, this continues to track pretty well. And they essentially had this peaking. They've got a double top on here. Not everything's going to be perfect. But if you go back to this cycle, I don't know if they've called it a forecast, but again, just a composite cycle of what one would expect. This continues to play out very closely. It essentially is saying we will get a bottom late September, early October. They were right on the June, July, August rally, right? Basically through mid-August. And then we get a sell-off through the end of October. And then it is a strong rally into the end of the year. So again, obviously it can peter off and totally become not even close. I mean, we've got 3.5 months left, but just something that has tracked pretty closely this year. And if it were to continue to play out how it has, then yeah, we're looking at a pretty good Q4.
And interesting there too, if that does turn out to be like a double top, and that puts you right back up against the 200-day pretty much again, right? So
yep,
be interesting to see how that plays out, if that is the case.
And it goes back to something Dan touched on earlier of this. We talk about September seasonality. A lot of it is the back half of September. So we had a lot of people talking about it coming into the month. We've had a pretty strong bounce to start. But just know that, if we're going to get super nitpicky about what September seasonality looks like, that weakness that everyone gets their feathers ruffled over, it actually starts next week. So we'll see. We will see if that plays out. I have absolutely zero idea if it does. But if it does, yes, expect more weakness into the end of October, and then kind of likely that we see a pretty solid bounce that this continues historically, and that's all we got. All I got is history.
Yeah, no crystal balls here.
I wish. I've been begging Dave to buy one, and he won't splurge. He said Paul wants to put money towards the new cubicles for insurance area. I told him to get a crystal ball, but you get a crystal ball, we can buy as many cubicles as we want.
You could do better than cubicles at that point.
Yeah, we could. Everyone could have their own golden throne to sit on.
So, talking about seasonality, what just blows my mind, because I think I just figured this out. You remember that song from Green Day, Wake Me Up When September Ends? It was about the stock market. I just figured that out.
It had to have been.
Come on.
It had to have been. I would be totally fine if someone just came and tapped me on the shoulder at the end of the month.
Hey, wake up. It's over. Time to move on.
We're back in an uptrend. We're like, all right, well rested. Got a lot less gray hairs. So I will say, kind of to wrap this up, some of the strongest areas continue to be discretionary and financials. I think that those are pretty solid. Industrials also. Retail. Quite a few retail stocks that look okay. Broker dealers and exchanges continue to look very strong within financials. That I think is absolutely a favor and pair or a point in favor of the bulls. Industrials as a whole look good. Transport's still pretty weak. And then tech. And the tech, semiconductors, all that weakness, relative weakness, I think that's what I'm most interested into. Does it end up being just too big of a headwind? Or are we're going through our regime change, and we're going to go through this, multi-year value period where financials and industrials and energy, right? I think energy's kind of already pointed to the fact that we could be on the cusp of a big value period. A lot of those stocks can still have not fallen off. So,
and I don't know if it was you yesterday or maybe it was 2 days ago that shared that with the Apple relative chart for the S&P.
Dave,
that's a breakdown.
Dave, yeah, and you get this.
Just look at that thing. That's pretty hard to ignore.
And that was such a good point. It was such a big, for lack of better words, victory for bulls and the S&P to have Apple, show relative strength. Again, does this just become just too big of a headwind, and we see tech and we just see tech suck? And because it's such a big weighting and everything, that it's a headwind for indices, but yet, stocks like Waste Management and Dick's Sporting Goods and, all these other things, Deckers, Kroger, Interactive Brokers, these other stocks that are outside of tech do kind of fine. Do you know? Does anyone know? Does anyone know? Please tell me you know. I'll pay you so much money, Kevin, if you know, or Dan.
I'm going to say, if I did know, I don't know if you have enough money to buy it.
Yeah, I wouldn't. If I knew, I wouldn't sell it. Well, yeah, I'd probably sell it. Yeah. Probably. There's a price for everything. All right, so we have wrapped up the podcast for today. It is time to go close up the week, see how we're going to finish up on the charts. Is there anything that you two would like to leave our clients and listeners with?
Oh, thanks for listening this week, and have a great weekend.
Yeah, for sure.
All right. Have a great weekend, everyone.